Hi everybody, how about we take a look at Link versus Bitcoin and Link versus US dollar together? Yeah, sure, why not, Rocky? That's a great idea. I'm Rocky Outcrop. I'm speaking to myself here because obviously I've gone a little bit stir crazy. Thanks so much for tuning in and let's take a look at the charts together. As you can see here, there's a lot of craziness on the charts and it doesn't really make any sense really when we're looking at it in terms of the weekly time frame, in terms of all those drawings. But I did want to start off as it's the weekend and I've been looking at this across the different coins so far today that I've been doing analysis on, that it's the weekend, and let's take a look at the week and how the week has been ending. So this is the weekly time frame, and as you can see, we've had a pretty crap one. But in terms of the week, you know, we're just consolidating in this area here, as you can quite clearly see. If I put this triangle back on, why does that not fit there? That's weird. Go down to the 24-hour time frame. Has it moved? No, we're still inside it from the 24-hour time frame. 2-day time frame, still inside it. Weekly, yeah, still inside it. Don't know why that was weird there before a second ago, but yeah, you can see that we're still inside this thing here, and we're consolidating. So that's really all that we have to look at from the bigger, broader time frame point of view. Excuse me, sorry about that. I don't know. Actually, I'm saying excuse me, but no need to. That's better. Sorry about that. Yeah, so we're still consolidating inside this area here. You know, as you can see here, the RSI, the stochastics, all more or less doing the same thing. Look at this sort of the descending, the ADX is just sloping down the way as these two things move ever so slightly together, and they don't diverge away from each other because we're neither going in one direction or the other, and it's just kind of sloping down the way at the minute, and that's just all just fine as it is. So we're just going to have to look down to the lower time frames to get any sort of idea if there'll be any movements in the meantime. And what have we got on the go here? Well, if we look at this area as being a trend rather than consolidating, and call this a high, a low, a higher low, you know, a low, high, higher low, higher high, higher low, higher high, and call this area here, then what is it, you know, compared to previously? Well, actually, unfortunately, it managed to close just lower than this before, but this was actually our low here when we were doing that pattern. So low, higher, high, low, high, higher low, higher high, higher low here, higher high, and then higher low. Okay, so if the prices don't actually go down the way, then we're doing okay. So looking at this as a bullish trend, then looking at the oscillators down below to look for divergence, we look at the tops on them because that's how you look for these things. So for classic sort of visible divergence, high here, and a high here, is a high here, a high here, and a high here is not divergent. High here, and you know, is there a touch of it on the stochastics? Yeah, there is on the stochastics. That's why we have that line drawn in there. No big shock. And then high, and higher high on the DMI. So 2 out of 3 ain't bad, as Meatloaf said. So I love you, I want you. Oh no, wait, I want you, I need you. But the stochastics are saying there ain't no way I'm ever going to love you in terms of don't be sad. 2 out of 3 ain't bad. So that's what we're looking at. Hit the subscribe button. Go on, do it. Anyway, hit the like button as well. Go on, why not? Just for the crack. But this is proper technical analysis, nevertheless. This is what we're looking at. Still got higher highs and all the rest of it on the go. I don't even need all those drawings on there. Got all the higher highs, higher lows, all that stuff. That's good. This here is coming in though. This low here, sorry, is coming in with RSI being lower than the previous one over here, and likewise on the DMI. So you know what you could say there is in this area you have hidden bullish divergence. You know, so that's all quite good in terms of just this sort of little stair-stepping case scenario for will we go up and manage to achieve, you know, a higher high on the bigger time frame and ultimately potentially break out of this zone. So how have we been doing in terms of the Fibonacci's here? Sorry about that. In terms of the Fibonacci's here, well, we came down at 382, which is realistic area for, no, sorry, this is on this one. We came up as high as the 618, then went down to 50%, then down to 382, and we turned around at that point there. So looking at it from the other way round point of view, from the Fibonacci, taken then from the swing low to high, and looking at this retrace down the way, how far did that go? Went down to 236, created a valid Fibonacci, went down to 382, hit the 50%, one bang on, more or less, or whatever, and then has turned around since. So we've got the Dow Jones question mark coming in here for us, and will we potentially turn around there on that one? So we have the Dow 50% retrace on that. We've got no classic visible bearish divergence, touch of hidden bullish divergence, And that's what we're looking at in terms of the sort of, let's call this the smaller time frames. That's what we've got there. That's what we'll have back in to check in on as well. But like I say, let's actually just bear in mind that in terms of the weekly time frame, anything all the way down to 39,000 would be, kind of putting in a higher high, a higher low, sorry, as part of this overall just kind of the lower highs and higher lows structure of consolidation. Typical consolidation happens, consolidation is kind of the wrong word, but just in terms of tightening, the type of stuff that we look for all the time in crypto land is this tightening consolidation structure where you have lower highs and higher lows at the same time. So if you wanted to do that, continue that on the way with the weekly, you could do that coming down towards the lower end here, 40,000. But we're hoping for this to kind of have operated in terms of all we need in terms of this Dow 50% retrace. You can see it on the weekly here, having come up as high as our starting point and that 618 previously, and then to continue on up the way. And hopefully, this will just be overall part of the this upward trend of high, low, higher low, and then on the way up. So what we're still hoping for in the grand scheme of things is for that to be the higher low and for the prices to not drop down below 39,000. Grand scheme of things for 39k to have been higher low and not break structure of higher highs and higher lows by going lower and closing weekly below 39k. Anyway, to say that that would be unlikely or impossible to happen is definitely premature. It could certainly happen. We've got a downward structure here on the daily time frame in terms of that Fibonacci retracement. We could go down to a very low time frame and find a downward trend here for us as well, which we can see low, 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 and low, 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 low. So we have an RSI and on the DMI, with the DMI we're managing to stay. We don't have a bullishly divergent. Of course, on the stochastics, it's like class B, maybe, or is it not? It's debatable. We've got debatable class B bullish divergence on the stochastics, but then 2 out of 3 ain't bad in terms of the lower time frames, 4-hour time frames. I want you, I need you, but there ain't no way I'm ever gonna love you. Downward trend. 2 out of 3 ain't bad. So there you go. So we can finish this off by making it fully not biased. Down. I want you. I need you, but there ain't no way I'm ever gonna love you. So don't be sad. 2 out of 3 ain't bad for 4-hour downtrend. Okay, great. Mitchell, appreciated for tuning. Oh wait, no, we've got to do the USD thing. Damn, I thought I'd done this. I thought I'd finished it off. As you can see here, big movement away from each other on the DMI here on the 4-hour time frame on the and an increase in strength of trend as we have downward price action, which is not divergent here on any of the oscillators down below in terms of this 4-hour downward trend on the USD prices. Going up to the 24-hour time frame, you've got the same overall scenario as what we were talking about on the Bitcoin price action. However, the idea that we had before about this potentially being a fallen wedge that we could get a breakout from with upward price action movement as a result hasn't panned out for us. In fact, if anything, we've just discovered a tiny we've had this without being bearishly divergent. We've just kind of come down here and put in a low. So let's have a look at that in a little bit more detail, going and zooming on in, seeing that we may have potentially broken out of a channel area that we had on the charts here. But a breakout of a channel area on the charts quite often leads to just turning into a different type of thing. For instance, a ascending broadening wedge, which would be a bearish pattern. Let's hope for the best though, in that we've just got this dip outside of the channel. which ultimately results in us coming back in again. The key area to be looking at here will be, of course, $4.11. We're at the $4 marker at the minute, having found support in around this $4 area, having come down to the 21 or to the 50 moving average, as we said that we probably would, overall in the grand scheme of things. We've been supported by the 236, technically, so to speak, in the 55 EMA in this area. Seeing a turnaround here, keeping this as an invalid Fibonacci retracement and moving back up above the entry point to this channel at 410 and moving up towards our 420 blaze it targets past the 21 EMA would be ideal in terms of seeing this thing turning around. In terms of the weekly time frame, moving up here then, doing this, finishing it off, you can see then that, as the week is going on, we could eventually still end up inside of this channel. We could have this this other sort of slight shape here. Of course, the top end of the channel could easily be adjusted in order to keep this as being a parallel channel rather than an ascending, broadening wedge quite easily. So the subjective nature comes into play there. And really what we're looking for is for the $4.10 area to be broken on the way up, 420 blaze it so high, you get as high as a kite and you go past 435 and on up to the 460 area. By the way, if you're wondering, I don't take drugs, so I'm not whatever, I'm not high. I'm just enjoying the charting, and and then looking down towards the lower sides. Of course, $4 being that critical area, and then past that, the 236 at 389 is what we'd be looking at. If we break below that, then of course, then you've got the most crucial area of support that we've had over the last month or so really has been that 370 area, and then on beyond that, you could quite easily expect to have not only 340 tested, but quite probably the $3 level itself as well. But the 21 EMA on the weekly coming in at 340, where the 382 is, would be where you would first look for a potential turnaround on the prices on this dollar preparing, if that's the case. Yes, well, if you stayed past me saying bye after the Bitcoin one, then you got the dollar comparison, and that's everything that you need to know. I hope you enjoyed the episode and me singing Meatloaf songs, and all the best. I'll catch you in the next episode.